Hi, I am Anna. I come from www.ntvforex.com. A slightly risk-positive bias to start the week with USD rebound on pause video analysis. http ntvforex.com news ID 155128 8/24/2020 11:54:28 am market overview. Major markets are seeing a slightly more risk-positive outlook for the new trading week, although it is only really in the equities space where the impact is being truly felt. Futures in the US are breaking to all-time highs today. The dollar rally on pause today is helping this, even if Forex majors look a little tentative in a risk rally, whilst bond yields are all but flat. NBSP in the US, the FDA authorizing a treatment for COVID patients is seen as encouraging. Asian markets held a positive bias overnight, whilst US futures are pushing to record highs this morning in the US. There is a sense of stability in the Forex majors today, where the dollar rebound that was a feature of the latter part of last week is settling down. The short covering dollar rally that set in following the FOMC minutes last week is on pause for now. Traders will be spending the next few days weighing up their options ahead of a keynote speech by Fed Chair Powell at the Jackson Hole Economic Symposium on Thursday. Wall Street closed higher, with the S&P 500 0.3% at an all-time high on Friday. Futures have pushed on this morning, with the E-mini S&Ps over 3,400 and 0.4%. This has helped a mild positive in Asia, with the Nikkei 0.3% and Shanghai Composite 0.2%. European markets are also positively biased into the cash open, with FTSE futures 0.8% and DAX futures 0.9%. In Forex, there is a risk-positive bias, with GBP and AUD outperformers, whilst JPY and USD are slipping slightly and NZD is the main underperformer, albeit mildly. In commodities, risk-positive means gold and silver lower for now, with the legacy of recent slips still weighing. Oil is slightly higher. There is no key data of note on the economic calendar today. NBSP chart of the day: ANZD USD. With volatility ramping up in recent sessions across major Forex pairs, the potential for a key breakdown on the Kiwi has taken hold. The support at 0.6500 was a July low, which was effectively a pivot from a basis of resistance in June. However, as the market has shied away from 0.6715 in the past few weeks, the recovery momentum has been lost and pressure has grown back on 0.6500 again. Forming a run of lower highs and lower lows, the support at 0.6500 has become increasingly important. Tested last Thursday, it held into the close, but if the Kiwi were to close below 0.6500, it would be a 7-week low and mark a key technical shift in outlook, one which would also complete a reversal top pattern, arguably a head and shoulders top. The deterioration in momentum indicators already threatens the breakdown, with MACD at 10-week lows, whilst RSI is already leading the market lower. A closing breach of 0.6500 would complete a 215 pip top pattern and certainly imply a test of the key June higher low at 0.6370 in the coming weeks. The rebound to 0.6650 last week's high is now a key resistance now, and any bull failure under 0.6600 area will increase the negative pressure now. NBSP Brent crude oil: as the recovery in oil has developed over recent months, the acceleration of the rebound has slowed. Periods of calm consolidation have been interjected with mild corrective moves. Each time, though, the weakness has been bought into and the consolidation has eventually ended with a break to the upside. So with the market just rolling over in the past few sessions, the usual tendency has been for this move to be bought into. The opportunities tend to arise around the 21-day moving average, which has been a good basis of support over the course of the recovery. It would appear that the market is again at an important juncture. It comes with RSI unwound towards 50, which is typically an opportunity in the past few months. However, MACD and stochastics are falling away quite sharply this time, and the bulls need to respond to a move below the 21-day MA around $43.05 today. There is breakout support around $43.90, $44.25 too. A closing breach of $43.90 would be a warning that the bulls are losing their control and could see a move back towards the important $41.30 key higher low support. Resistance is at $45.10, $45.50 to fully re-engage the bulls. NBSP Dow Jones Industrial Average. After over a week of consolidation drift back, the bulls had a positive move into the close on Friday to leave them in the driving seat for the new week. Picking up off 27,525 on Thursday, helps to bolster the old key June high of 27,580 as a basis of support and a band of key initial support 27,525, 27,580 this week. As the support of a 4-month uptrend rises at 27,000 today, the importance of 27,070, 27,580 as a bizonia to catch near-term corrections is gaining technical strength. With two solid positive closes in the last two sessions and futures pointing to a solid positive open today, the bulls will be eyeing initially the recovery high of 28,155 as an initial test. Beyond that comes the potential for closing the key February bear gap at 28,400, 28,895. We continue to look to buy into weakness with momentum indicators still strong but also with upside potential following the recent consolidation. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.